Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through Twilio stock, and this is a SaaS company that is operating in the communication software business, and they use cloud-based services to pretty much allow companies to communicate better with their customers in multiple different ways. So first thing we're going to look at is their annual report, and we can see here it says, we are the leader in the cloud communications platform category. We enable developers to build, scale, and operate real-time customer engagement within their software applications via our simple-to-use application programming interfaces. The power, flexibility, and reliability offered by our software building blocks empowers companies of virtually every shape and size to build world-class engagement into their customer experience. So they have so right now the stock price is it's up over 500% in the last couple of years, but in the past year it's down almost 50%. So we're going to go through Nico's stock market checklist and see if this stock is a good buy or not and how the valuation looks. So a couple things before we start is Twilio has about 250,000 customers, and their top 10 customers account for less than 11% of total revenue, which is a good sign. I do like to see that. Too much customer concentration can be a little bit risky, and that's not something we like to see. Now, at the same time, we have international revenue accounting for a third of their total revenue, also a good sign that shows diversity and their source of the revenue are spread out. So that's good. Next is their customers include companies like Netflix, Ford, Airbnb, Shopify, Intuit, and lots more. So as you can see here, there's lots of reputable companies on their list, and that's always a good thing to see. Then we have their CEO and co-founder, Jeff Lawson. He's been CEO at this company since 2008, and he's managed to build this company up magnificently over the past couple of years. The stock price 5 years ago was $30, and today it's $188, and earlier this year it was $400. So the revenue increases over the last couple of years have been insane. So first, the last note I have was 34, even with the share price drop, $34 billion market cap for a company that loses money, not yet profitable, is still a lot in my eyes. See, it's trading at a 33 billion. So that's not something I always like to see, but it still has come down a lot, and that's not the only factor. So we have other factors to base this off of. But the first one is the stock down or oversold? I put yes, that's going to get a check because it's down over 50%. And then we have the revenue and net income increasing. And if we look over here, we can see that. So see, the past 4 quarters, they've managed to lose anywhere from 170 to $230 million each quarter. But over the last 4 years, we've seen revenue go from 400 million in 2017 to 1.7 billion in 2020. So magnificent revenue increases there. However, net income, the earnings have gotten worse over the last couple of years because they're spending so much on marketing and sales and getting more customers and trying to expand. They've also made lots of acquisitions in the last couple of years, so that's also a big expense for them, but it definitely has played a huge role in growing the company and growing the amount of money they make and the amount of customers they have. So next up, we have a healthy forward price to sales as well as a healthy forward price to earnings. And we have a forward price to sales of 9 with 32% growth expected in revenue growth for this 2022 year. And so that definitely gets a check in my book because the metric I like to go off of is a forward price to sales of 9. That means I want to see at least double that in the percent revenue growth. So they're doing 32% revenue growth. That's more than 3 times that price to sales number. That looks extremely healthy to me, and that's not too bad. That's not too high of a valuation. For the forward PE, they are an unprofitable company, so they don't have one, so that's going to get a no. Next up, we have, is the company innovative and do they have a moat? I put yes. There's several things that you can base this off of. One is that they're the leader in the space. There are other companies doing what they do, but they seem to have an edge on some of the other companies. Once you make a lot of contracts and you have a really sticky business model, you have companies like Ford, Airbnb, using your products and services, it's the customers are going to be there normally for a long period of time, and it's hard for them to leave. So that's definitely a moat for this company. If we look at their website, you can see here, you can get an idea of the type of products they offer. Let's see, we don't want. And so they have, it's pretty much like, it allows companies to send out, mass text messages, or you can do calling, you can do WhatsApp, you can do a bunch of all these different things. Okay. So see, Airbnb, Shopify, some of their customers, and they pretty much, they allow the company to send out a message to all their customers, and in an easier way to do. Now, part of me thinks, when I first saw this, I thought, okay, why can't the company just send out an email to all their customers and without using them? But it seems like they do make a lot of things easier, and they do allow companies to communicate with their customers in other ways that the company would normally not be able to do. So maybe they do have something there. Is the industry growing? Yes, it sure. I mean, any type of company needs to be able to effectively communicate with their customers, right? And we've seen them grow revenue insanely over the last couple of years. So there's definitely more and more businesses are interested in this type of service, because the relationship you have with your customers is one of the most important things, if not the most important aspect of running a business. So that is definitely going to be a thing that continues to grow in the future. Then we have return on invested capital and healthy margins. Those both get a no because they're losing money, so they're negative. Healthy cash flow, once again, same situation there. So I think that's going to get a no. Diverse revenue streams, how I mentioned earlier, we have a third of their revenue coming from international markets, and we have their top 10 customers accounting for less than 11% of total revenue. That's also a good sign. 250,000 companies are their customers. That's definitely going to count as diverse streams of revenue. The other way to look at this is different types of products. I think so how I said, they're acquiring companies to be able to offer different things, okay? And they offer these, different services and packages to these companies. So I wouldn't say they're, as far as the different ways to make money, they don't have a ton of ways to make money. It's really just about that communication aspect, but that seems to be enough for this company. I mean, there probably is a huge TAM for companies willing to pay for that. So that might be enough. Next up, we have the balance sheet, and the balance sheet looks good. More long-term and short-term assets than liabilities. That looks good, as well as equity has been increasing. And this is something that stands out to me, because a lot of companies that have these negative margins or are growing companies have a lot of expenses and they're still unprofitable. Their balance sheets are normally not good, because they're using, they're burning through cash, and they normally have a lot of debt. So this is kind of impressive. This is something that I do that does stand out to me. A lot of companies don't have this. So that's a good sign. Next up, do they have a share buyback program? Are they diluting shareholders? And do they pay a dividend? Well, no, they don't pay a dividend, and I don't expect them to. As far as the number of shares, there's been an increase of 20% over the last year, which is not good. That means it's diluting shareholder value. The shares are going to be worth 20% less. And so that's going to get a no. Finally, we have, is big money or insiders interested? And if we check here, we can see which hedge funds are holding this stock. And as you can see, about 86% of institutions hold the shares. And you got Vanguard, BlackRock, and Morgan Stanley, three of the biggest funds out there, all having over $3 billion of equity in this company. Then the next thing we can do is check to see what the insiders are doing. And if we look up Twilio on this website, it will tell us over the last couple months, what have insiders been doing? So as of so it's pretty much been pretty divided here, pretty equal as far as buys and sells. In December, we've seen 2 buys, 5 sells. November, we saw 8 buys, 9 sells. When the January numbers come out, I would think it'd be a little bit better. The stock's down so much, you would think the buys would be through the roof and nobody would be selling, but we will see what happens there. So that's going to get a yes as well because of the hedge funds. And so overall, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And that's barely gets a a pass, but that does count as a buy technically. So I do not own a position in this. I never have owned a position in this. And although the company looks interesting, it looks like they're a fast grower. I think they're expected to grow at over 30% a year for the next couple of years. I don't know. It still doesn't really interest me too much, just because I don't really like to have that many companies in my portfolio that are losing money. That's never a good sign. But look how much the stock has come down from $435 now down to $188. So if you're interested in this company at all, this definitely looks like a good time to get in. I can't picture it going much lower than here. It looks like right around this 190 mark is going to form a resistance point probably. And if it was to go down here in towards 120, I'd be really surprised, but we will see what happens. So yes, that is all for today. Thank you for watching, and I will see you in the next video. If there's any certain company or stock you want me to analyze, comment down below and I will make a video on it. Catch you in the next video.